Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Jed Richardson and Tom Panulias from Trigon Metals, which trades under the symbol TM on the TSXV. We currently have a buy rating and a target price of $3.50 on the company. Gents, thanks for being here today.
Thanks, Ben.
So Jed, just to kick it off, for those that are unfamiliar with the story, maybe you have a deck here. You could walk us through top to bottom. I'll jump in with some questions as we go, and if I have any at the end, we can follow up with those as well.
Sure. Thanks, Ben. Let's work our way through here. First of all, we're a copper company. Copper production in Namibia, in production, looking to produce about 12.5 million pounds of copper this financial year. Copper, we saw some great price action in June, getting up to over $5. We've checked back a little from there, but the fundamentals are really strong behind copper. The theme over the past 2 years has been electric vehicles, but I think more and more we're seeing just power infrastructure and power needs, with a lot of emphasis over the last increasingly over artificial intelligence and the amount of power that's going to be required for that technology, processing power. Now, one thing I always like to emphasize is where our copper is coming from. Throughout my career, so over the past 20, 30 years, most of the world's copper was coming from Chile and Peru, and those mines are now closing, and there's a growing reliance on Africa and Central Asia for copper. In those jurisdictions, having a high quality place to work is very difficult. Congo is not the easiest place to do business. I think similarly for some of the Central Asian jurisdictions, Namibia really stands out as a high quality place to be working, and that's been our experience. And so I do like to emphasize that when we talk about the macro, not only is there a macro need for copper, there's a smaller and smaller list of good countries to be working in, and we're lucky to be in one of them. Some images from around the Combat Mine. I think we've got a record that we can be pretty proud of. We started mining in May of last year. We got the mill up and running in August last year, hit commercial production in October of last year. We started underground mining in February, hit commercial production from the underground in April. We're now shipping daily and producing concentrate. And then just last quarter, we started recording an operating profit and generating some cash flow from operations. So it's I'd say pretty enviable record as far as a startup junior mining company. This slide really shows you gives you a shot of what we've got. The company is formed around a past producing asset, and we've really benefited from all the infrastructure in place. So the 3 shafts on site, 2 ramp systems going into the underground, and kilometers of underground development. We started mining from the open pit, and that's in the right side of the slide. But underground, we've been mining in and around shaft 1, and we've been working with the ramp infrastructure at Shaft 1. We are currently operating a mill with 1,000 tons per day of capacity, and we're filling that with a blend of open pit and underground. The ramp infrastructure around Shaft 1, we've got 1,000 tons of capacity. So we've been biasing more and more of our production to the underground. It's higher grade, and grade has a really material impact on our operating costs, as really evidenced by our results in Q1, which we just reported. And I'll touch on that in another slide. But an important part of our whole story is our growth, and we will be growing through the grade from the underground, a mill expansion that we have planned for next year, and then Asses Far West, and that's the left side of the slide. This is a 800-meter, 2,000 ton per day production shaft that goes into a whole new area of the mineralization at Combat, and it gives us an area to both expand our resource and expand our production. We estimate that it could add over 40 million pounds of new production from that one area, and a whole new life to the resource. So I like to call it the best investment in copper, where the investment in a 2-year time frame of around 35 million would net back 40 million pounds of new production. I think you'd be hard pressed to find a faster and larger return for your money than what we have with Asses Far West.
Yeah, and if I may just jump in here.
Sure.
I recall the capital just to build the Asses Far West shaft was in and around 70 million US. And then there's development there, and you guys are benefiting from the development that's all over the site around Shaft 1, Shaft 3. You have a full mine infrastructure there, and yet you didn't exactly pay for it like the previous company did. So it's one of the best situations to be in. And maybe just on that, last week you guys reported some drill results from around Shaft 3. So maybe you could just speak to those. I know in a couple slides you're going to get to it in a bit more detail, but just the importance with this visual here for investors to visualize and see where these different areas are that you guys are drilling.
Sure. Yeah. So like I mentioned, that at Shaft 1, we have we're capacity constrained in that once we get up to 1,000 tons per day, it'll be hard for us to increase production beyond that. From the drilling that we announced just last week, that is in around Shaft 3, and Shaft 3 has its own ramp infrastructure. So the plan would be to still bias more production to the underground, and the results that we had show that that's feasible. We can access more tons underground, higher grade tons, more specific tons. But for those of you who've been following the company, can see that from the open pit, we honestly have been struggling to be profitable, and where we've been hurt is we've had a creeping on our stripping ratio, where we've ultimately had to strip more tons than we had in the plan, and that cost has hurt the operation. Last quarter when we biased to underground, we finally saw operating profit, but we still carried a lot of stripping costs from the open pit through the quarter. As we're now showing some flexibility in our mine plan to get more tons from the underground, we can shed that stripping costs, and the results last week show that even getting into the 2,000 ton per day scenario, we've got an opportunity to do the same. So let's take a look at those quarters. I keep on bringing them up in for reference, and you can really see that here. So what I've done is these are all of our production quarters. So Q3 would have been October through December of last year, and then Q4 would be January through March, and then Q1, which we just reported, is April through June of this year. And you can see there, cash cost, C1 cost, $396 for that Q3. So it was our first production quarter. We're really proud to be in production, but it was, we weren't recording an operating profit, but cash costs around $4 in your first quarter production. Not a bad number, but wasn't what we were hoping for. And I'd point to that was an all open pit quarter. Q4, we had the benefit of 12,000 tons coming from the underground. That brought the average grade up, and it definitely impacted our cash costs. Having the cash costs started to come down, but as far as copper produced, it was marginally better than Q3. And then you see the impact in Q1, where the pounds of copper increases dramatically. So 2.3 million pounds of copper. Cash costs are down around 323. That's actually a more accurate representation of what our cash costs are than the Q4 cash costs, which included the pounds of the underground, but not the full cost of the underground. In our Q1 numbers, that's fully costed, and there's actually still still a lot of room for improvement as we increase the pounds of copper produced in this quarter and the quarters coming. One thing that you should also take note of here is our production capacity, and you can see that processing tons line. Our production capacity is 90,000 tons. So in Q3, all open pit, we got pretty close to the 90,000 tons, but in Q4 and Q1, there's still a lot of additional capacity there. So we've quite frankly been babying the mill, but we will get closer to that 90,000 tons over the next 3 quarters, and that'll have a dramatic impact on our cash costs and our operating profitability here. You can see already with more than 50% of the ore coming from the underground in Q1, you can see that the big uptick in in copper produced
Mhm.
as we bias more and more from the underground and have higher throughput. You'll see the copper produced increase and the cost per pound decrease. That's even more evident by the guidance which we've maintained. You can see we have to get to around 12.5 million pounds of copper this year. So you'll see some 4 million pound quarters coming out but before we get to the end of the year, and that'll have a pretty dramatic impact on our cash costs.
Yeah, that's great.
So the one thing that I think is important is we're still growing, and you can see even quarter by quarter the impact and the growth that we have both planned and the growth that we've executed on. But as we continue to develop the mine, we're doubling our production getting into next year. So going from that 12.5 million pounds to over 26 million pounds, and this is something that we're looking to do with adding debt. Just in July we announced the working capital facility that we put in place with IXM, and we'll be adding to that as we continue to work with them. And then also we've got the Assets Far West, and that's the shaft that we have in the western part of the deposit.
Mhm.
And that ultimately we're looking to add 42.4 million pounds of new copper production over the next 2 years. We'll start off by drilling that area out and bringing it into resource. But we've got the infrastructure in place. This is like I said, a really important and meaningful impact to production, getting us up to 65 million pounds of copper produced annually.
Yeah, it's a huge uptick, and I think everyone was looking forward to this year getting the underground, but really it all starts here now that you guys will begin to cash flow ramp more than double between now and next year, and then it really accelerates with Assets Far West. So good path ahead.
Yeah, and it something that is something I think it's important to note is how clean our balance sheet is. That we've got capacity now to take on some debt and use that for the growth. So you were talking about the drilling that we reported last week, and the most important part for us is how close this is to existing infrastructure. So in this slide, you'll see that black line. That black line is the existing underground development. So the ramp that comes in from surface, the spiraling down, and the development that already exists. And you can see those areas, and those are the areas that we were drilling. And here's some of the results. 7 meters, 3.3% copper. 4 meters, 2% copper. 3 meters, 2.6. 5 meters, 2.1. Now, as an alternative to mining from the open pit, this is fantastic, right? So we're replacing tons that would have been at 1% copper with tons that we've got now at over 2%, and we're going to be mining with zero strip. So that's what makes the results we're talking about material. That we can replace open pit tons with underground tons, and we can do so with zero strip.
Yeah.
Also on this slide, I want to highlight that expansion that we're talking about. So this is for doubling the mill and for infrastructure underground. One thing that I'll note is, we are currently dewatering, and as we dewater to the 11 level, and the 11 level is actually highlighted in this slide here. It's the bottom cross piece that extends off of the page. I'll actually tick back to the cross this cross section view of the mine. So it's the second line between shaft 1 and shaft 3. That's 11 level. As we dewater there, and we're making some good progress there, we'll put in our permanent pump infrastructure with a lot of redundancy, and that will continue to dewater the mine. And our goal is to be at that level in the next couple of months. Put in that underground pump infrastructure, and that's part of the capital that we've got planned for the expansion of the mill, for the expansion of the whole operation. And this is where that capital that we've put in place and will grow on from IXM is going.
Yeah, and just quickly, Jed, sorry, just one more thing on the drill results. Obviously, great results, very close to surface. And
Right.
one thing I like to highlight is that, albeit these are high grade copper intercepts, grade increases at depth. And so as you dewater further down, you're going to be drilling further down, adding tons to the resource that are beyond what we're seeing here.
Grade. Yeah.
So there's further upside there that investors can get excited about. Excuse me.
Absolutely. Okay. So yeah, you can see the impact of that expansion. It'll add 13 million pounds of production, so taking us up to 26 million, and then our operating costs drop from an average cost this year, C1 cost of around $3.15 to around $2.06. And then the next expansion would be Assets Far West that we're working on. And you can see that I've broken it out in the same way, but 35 million that we need to invest plus equipment, which we'll look to finance in the same way that we did for the initial piece of the part of the underground with Epiroc. And that adds 42 million pounds of production, so taking us up over 65 million pounds annually, and dropping cash costs below $2 to around $1.60 a pound. So really material as far as what it adds to the production profile for the company, and I think really establishes us as a mid-tier producer at that rate. And this opens up a whole new area of both resource exploration and the production, of course. And you can see I've we've got some examples of what mineralization looks like in this area, and these are intercepts very close to the existing infrastructure. 10 meters at 4.5% copper, 8 meters at 6.1% copper. There's a hole drilled from surface that's 5 meters at 15.6% copper and 325 grams silver. So going back to your point of what happens as you get deeper in this deposit. So it's an exciting piece of the story, and I think really something that isn't quantified in even in the target price that you've got for
Yeah.
for the company.
Mm-hmm. Yeah, and as you guys get closer to this coming online, we'll look to integrate it into our mine model. But like you said, there's huge upside here, and that is where you won't be a small junior, you'll be a medium mid-sized producer, and utilizing all the infrastructure that's already there. It's a gift.
Exactly. No, and I think this is also what makes Trigon attractive to investors, but even for takeout, right? Like is that you $4 spent. I don't think you can find a better investment. If we're looking at $1.60 per pound of operating costs and a 35 million plus equipment to produce over 40 million pounds of copper, your capex plus OpEx is what is that, not even 250 per pound of annual production, right? So
you pay that off in a year.
Yeah, you pay it off in less than a year. I don't think you can do that pretty much anywhere else.
No.
Yeah, I think we calculate it's a 9-month payback.
Yeah, and I mean, just jumping in there on the majors and even mid producers out there, a lot of them are printing money at these elevated copper prices as well as gold prices, and you're seeing them start to acquire some junior companies just because they continue to trade at trough multiples, and they may as well mop them up while they can before this market really gets going.
Exactly. But our story doesn't end there. We're continuing to explore. I generally point to the results that we had at Schlangandal in April, which, like a really transformative as far as how you can look at this 35 kilometers of strike length, 15 kilometers away from the mill in an area that you're under the initial exploration model, you shouldn't have found copper. We're finding 7 meters 3.5% copper, 3 meters 2% copper, all very close to surface, right? And that on the opposite end of the property at Grossetave, we also have an area where we know there's copper mineralization at surface and a lot of copper outcrop to follow up on this trend. So we're working on surface sampling, really taking a grassroots approach at the whole valley, looking and ranking targets right now with a view to add to that profile. So from the 65 million pounds of that we're growing to, how can we grow beyond that with success on this valley? And I think again, really adding to what makes Trigon attractive. It's not just the 12 million pounds. There's a whole thesis around this trend here that can support a much larger production.
Mm-hmm.
Okay. Now we are also exploring at Cahari. This is very low cost exploration for us right now, but potentially big upside where we're on a belt that already has two projects that are valued at over $2 billion. So success here is a bit of a lottery ticket for Trigon investors, but some good reason for us to be to be to 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 be positive on this ground, but right now very low cost as most of the work is just geophysics. And then I'd like to remind investors about what we're doing in Morocco and the spin out of Safi Silver. This is something we had initially planned for the asset to be out on its own by August. We've had, well, I can't say we had a delay, but we were looking to work on a spin out with a shell company. We're now looking at some alternatives, but we still have an internal goal for this company to be out on its own by year end. There's a lot of excitement about what's going on in Morocco. You've got Aya with a massive capitalization on 2 projects. We also have 2 exploration projects, one of them very close to Aya's Boumadine project, and another a massive piece of ground over 112 square kilometers with a lot of mineralization showing at surface that we're really excited to get going on. We're continuing to do some work in the background here, so continuing to add some value. It should be a really each share should be valued at about 25 cents per share, with each as a Trigon shareholder, for every 2 shares you own, you'll get 1 share of Safi Silver. So like a 12.5 cent little gift for Trigon shareholders, still embedded in the stock. So so that date of record is still in the future. So buying now will give you if you're a shareholder now, you will be receiving Safi Silver shares in the future.
Great.
So yeah, I guess since the last time we did this update, we have had an update to the team. We've brought in our new VP Corporate Development, Tom Panulius. I'm really excited to have Tom as part of the team. I've known Tom for a long time. Tom and I worked together back at Verde Potash when I was part of a team developing a fertilizer project in Brazil. But really importantly, Tom has experience in corporate development at a really high level, holding the title of VP Corporate Development with Kinross Mines. I think we've got Tom on the line, and I can introduce him here. So, Tom, why don't you introduce yourself and talk a bit about your own history?
Sure. Thanks, Jed, for the podium. Yeah, I'm a finance background, but initially started off in research and then moved into industry, where I worked for TVX at the Cassandra project, and then transitioned from there, working for Kinross under the tutelage of Bob Buchan and Ty Burt in the VP Corporate Development role. And then after that, moved into investment banking, where I initially started with Dundee and then ran the mining practice for both Fraser McKenzie and Echelon Wealth Partners, where during that tenure, I've raised over $1 billion in the junior marketing space and involved with various M&A mandates for some of our clients. Really excited to join the Trigon story. Obviously, as you mentioned, the growth profile, in particularly in the copper space relative to our peers are unmatched, and wanted to be part of a management team to help you get that message across to strategic holders and also to our current investors and potential investors. So thank you for having me.
No, thanks, Tom. And like one thing, just like to emphasize, like we've steadily been upgrading as we become a more sophisticated company. In October of last year, we added Rennie Morkel, and he's on site 5 days a week, and really the operator at the Combat Mine, and then with a set of skills like Tom has, I think we've got a better interface for the market, and also I think we're at a point now where we start to make sense as either a strong growth company, but also potentially a takeover target. So having somebody with Tom's experience, I think, is key at this juncture.
Mm-hmm. Mm-hmm. Well, nice meeting you, Tom, and Jed, thanks for the intro. And I do know that's the end of our time here. So thanks for the walkthrough. It's great to see and discuss all of the upside that Trigon's got coming in the pipeline over the next few years. And we're looking forward to seeing you execute quarter over quarter here, and especially Q2 fiscal is going to be an exciting one to see in a few months' time. So for all our followers, if you haven't seen our research on Trigon, you can find it all on our website at atriumresearch.ca. And again, Jed and Tom, thanks for your time.
Thank
Thanks,
you.
man.